Have Aalok Shah joining in to analyze the ICICI Bank numbers for us. Aalok, hi, a very warm welcome to the show. So, what do you make out of the ICICI Bank earnings? Profit figure of about 1,604 crore rupees. Does it meet your expectations?
The headline numbers look a bit lower to our estimates, but I'll have to really look into what's been the deviation there. Is it more on provisioning or is it more on operating front? I also have to understand how things have moved on the asset quality side in terms of slippages and the sequential movement in GNPA, net NPA there.
So, Aalok, as far as the sequential movement in the NPAs is concerned, the gross NPAs have come in at about 7.75% versus 8.54% on a sequential basis, and the net NPAs have come in at 2.58% versus 3.65%. Your take on these numbers?
Yeah, so this numbers look encouraging. The sequential reduction is sharper than expected, and I'm sure there has been a very good amount of recovery upgradation in addition to lower than expected slippages, which analysts would have built into their numbers.
Aalok, the bank has also announced a bonus issue in the proportion of 1:10. So, was that on expected lines, or has that come in as a positive surprise to you?
I don't think anyone was talking about bonus for the bank. So this is kind of good news for investors there. But that's more of a one line item on the share capital side. What I'm more worried, what I would more look at is in terms of how has been my capital consumption in terms of Tier 1 ratio movement, and how does the overall CAR position look like for the bank. I will also look at how the loan growth is shaped up in this quarter.
Aalok, so stay with us. We also have Gaurang. Aalok, coming back to you. So you wanted to actually see the capital adequacy ratio, how the bank has done on that parameter. So capital adequacy ratio has come in at about 17.15% versus 17.84%. So that's how the capital adequacy ratio has panned out for them. Also, what do you make out of some of the other parameters such as loan growth, deposit growth? Also, they've classified 3 accounts for 795 crore rupees as fraud accounts or NPAs, and they've recovered about 4,063 crore rupees as of the gross NPAs. So, what do you make out of all these numbers?
So, three parts of discussion here. In terms of capital consumption, I did hear about a 14% loan growth and some sequential decline in capital adequacy ratios, but 17% plus overall CAR is still a very strong number to look at, and I think this is highest amongst the private lenders that we look at in the banking space, and will clearly kind of send signal that there is adequate amount of capital to continue growing business at 15% plus run rate on an overall portfolio. The second question on loans and deposit side, Axis Bank yesterday did report a very strong growth on the deposit side, and I'm sure this kind of did come in as a surprise for a bank where deposit growth was growing in the range of 12-15%. The strong growth in retail term deposits is commendable for ICICI Bank, and we'll have to really understand what's really changed in terms of the strategy towards augmentation of deposits. On the third thing, something which I did talk about is a very sharp recovery upgradation that we would have seen, and a number of 2,000 crores of slippages is really a good number to go ahead with. And when you talk about 2,000 crores, including 795 crores of some 3 fraud accounts, then that's a good number. We certainly are at a peak of NPA cycle, and at a time when recoveries are coming in faster than expected. I would also watch out for any kind of recovery from written off accounts, something that we saw in Axis Bank yesterday, if there was any element in ICICI Bank today.
Sure. Good. All right, Lalita, thank you so much for your analysis, and thanks a lot to Gaurang and Aalok as well for helping us analyze ICICI Bank Q3 earnings. So basically the numbers were sort of mixed because NII was above expectations, profit was slightly below expectations, and margins were in line with the expectations. And like most of the banks, so we've seen a strong bump up come in from the other income, mainly because of the treasury gains that the banks have seen. So mixed set of earnings coming in for ICICI Bank, but largely as far as operationally the performance is concerned, it's a good performance coming in from ICICI.